Welcome back. It's time now to take a look at the top business stories. Review of Abu Dhabi's economic laws underway. Nakheel close to a threshold for a restructuring proposal. And German Chancellor Angela Merkel and country's atomic industry suffers huge setback. Let's look at the equity markets first. The UAE bourse is headed into different directions today. The DFM General Index gained slightly by 0.1% to close the session at 1,557 points. Stocks to watch are EMA Properties. Its shares rose slightly by 0.6%. Drake & Skull gained 0.6%. And Arab Tech Holding rose 1.8%, as did Emirates MBD, which gained 1.2%. DU, on the other hand, fell 1%. 125 million shares were traded, valued at 171 million dirhams. Over in the capital, the picture was a bit different. The ADX fell 0.5% to close at 2,633 points. The construction sector was the one to suffer the most, as Alder Properties lost 4.5%, and Surur Real Estate fell 3.9%. The banking sector was mixed. Abu Dhabi Commercial Bank lost 2.1%. First Gulf Bank was down 0.6%. National Bank of Abu Dhabi fell 0.3%. But Abu Dhabi Islamic Bank was up 0.6%. Index heavyweight Etisalat fell by 0.5%. 101 million shares were traded, valued at 147 million dirhams. And now let's have a look at the GCC markets, which ended mixed today. There were several negative developments emanating from the Eurozone last week. Portugal's Prime Minister resigned. We saw both Fitch and S&P reduce Portugal's debt rating, while Moody's slashed the ratings of 30 different Spanish banks. Amidst all this bad news, the movement of the euro didn't really reflect that. To find out why, we're now joined by Gaurav Kashyap, head of DGCX operations at Alpari Middle East DMCC. Welcome to the show.
Thanks once again, Linda.
Tell us, why are investors still so bullish on the euro?
Well, before I continue, let's not forget about the negative news coming from Germany about Angela Merkel losing in some regional local elections. But, despite all these negative news, we really didn't see that type of movement emanating in the Euro-USD crosses. I mean, despite all this doom and gloom, we're seeing the pair closing maybe only 110 points lower on the week. And, what we're seeing is a lot of the movement and support coming in the euro pair, as well as the GBP-USD pair, is as a result of these interest rate hike notions. What markets are pricing in is for an interest rate hike on behalf of the ECB. They don't foresee that these recent developments that we saw emanating from Europe are going to have much of a bearing on the ECB's future rate hikes. So this is why we're seeing a bit of a support or a floor being established in pairs like the Euro-USD or the GBP-USD, which is also along the same lines of going through a very potential near rate hike. Now, looking forward to the trading week ahead, we're probably going to be seeing some kind of volatility in the Euro-USD pair. We could see some more downward momentum dragging the pair lower this week. A couple of things we'll be watching for: the non-farm payroll numbers on Friday. Any type of improved number following February's very high report will be very dollar positive. We're also going to be watching the European Banking Authority's stress tests on a couple of Irish banks. That's going to be taking place on March 31st. They are probably estimating up to 35 billion euros required by these Irish banks. Any type of amount matching that or exceeding that will be very negative for Euro-USD.
Huge number. So tell us, what other currency pairs are you looking at?
Well, Linda, actually, if you look at it, the most interesting pair of the last few weeks has been the Australian dollar.
Why is that?
It has hit a record high. In fact, today it made a new all-time high at 1.031. If you look at the momentum of the Aussie dollar pair, despite a last week where there was no economic news driving the pair was tremendously boosted by a fresh inflow of risk appetite. So generally, when we see large buildups of risk sentiment, the Aussie dollar pair really rallies on this type of news. And as a result of that, we've seen it, on the back of 7 very strong days of gains. We're looking at a potential correction coming in place for the pair. We expect to see some US dollar strength coming into play, and as a result, we could see the pair moving back down towards 1.01 possibly on the week.
Thank you very much for coming in today.
Always a pleasure.
And now to our top stories. A review of Abu Dhabi's economic laws are currently underway in a bid to boost growth and investments into the emirate. Officials from Abu Dhabi's Department of Economic Development said that the emirate will not be able to achieve its 2030 goal under the current laws and that reforms are needed. Abu Dhabi's economic vision includes diversification of the economy away from oil. The emirate's laws therefore need to be kept up with a fast pace of development within the emirate. A new survey by the Economics Department covering 25 other economic entities and over 300 private sector companies revealed concerns over high service fees as well as tight property market regulation. Final recommendation on law reforms will be presented by the DED to policymakers next month. Master developer Nakheel announced that the company is close to its threshold limit to implement its debt restructuring proposal to its creditors. That's according to a local paper. In January, the developer said 91% of its creditors had approved the restructuring deal. Nakheel chairman Ali Rashid Lota said the company does not expect any more hiccups and that they are waiting for feedback from their creditors so that they can move forward with their Islamic bond issuance plan. He added that the size of the sukuk will be close to 5 billion dirhams. Under the proposal, trade creditors will receive payments through 40% cash and 60% in the form of Islamic bond. Already last Wednesday, Nakheel said the debt restructuring process is expected to be completed by the first half of 2011. Mortgage rates in the UAE are going down as valuations of properties get better, that's according to industry experts. HSBC has become the latest lender to cut its interest rates. It lowered rates on conventional and Islamic mortgages to 5.49%. That's the lowest level in the UAE currently. These cuts mean the risk profile of consumers will get better because the valuation of properties is also improving. During the UAE's financial downturn, some lenders provided mortgages for almost the full value of properties. According to a local paper, a number of banks have reduced their mortgage rates this year. For instance, Abu Dhabi Finance, which offers a rate of 5.75%. And in our fast financial news, the Middle East dominates the Power 500 list of the world's most influential people, with Saudi billionaire Prince Al-Walid bin Talal Al Saud at the #1 spot. He's followed by Dubai resident and media mogul Wael Gomin from Egypt. The chairman of Emirates Airlines, Sheikh Ahmed bin Zayed Al Maktoum, holds 4th place, and Ema Properties chairman Mohammed Alabar comes in 5th. Official data from the UAE Central Bank revealed that local banks increased their certificates of deposit by nearly 12 billion dirhams in February. That's an increase of 13%, the highest rate in nearly 3 years. The more banks hold such deposits issued by the central bank, the higher their risk aversion. It signals that the UAE banks rather deposit their excess liquidity with the central bank rather than lend it to the private sector. And after the break, we'll run you through what's making the headlines in international business today. See you at the other side of the break.